Hello, welcome back, and welcome if you are new here. My name is Jessica Abella. I am a tax advisor and I practice in the greater Seattle area. Today we are talking about startup expenses, what they are and how to deduct them and what that benefit is. So first though, why are we talking about this? We're talking about this for two reasons. One, the question comes up quite a bit as people are starting new businesses. But second, this has been in the headlines quite a bit lately. One of the presidential candidates has proposed a $50,000 deduction for startup expenses. And I just wanted to clarify what that means and what the impact actually is. So let's start with what are startup expenses. These are expenses that you pay either to investigate creating a business, investigate acquiring an existing business, the expenses to actually start your business, so not just to investigate it, but to actually get it started, and to the expenses that you incur before your business launches. So all of the prep work, all of the expenses that you incur before you can actually open your doors for business. So you don't get to just deduct them. In most cases, when you incur an expense for business, most of those expenses you just deduct as you incur them. But these expenses that you are incurring before the business opens its doors are categorized separately as this startup expense category. And currently, you can deduct up to $5,000 of those expenses just in that first year. So you open your doors, you've incurred more than $5,000 worth of expenses, you're going to take a deduction for $5,000. There are some exceptions. If your startup expenses were more than $50,000, there are some limits. So it's possible that all of your expenses will need to be expensed over 180 months rather than taking any of it up front. If you had, say, $10,000 in startup expenses, you're going to deduct the $5,000, and then the other $5,000 will be deducted over 180 months. So these expenses, again, they're not all deducted in the first year. Like I mentioned, the current proposal is to allow a $50,000 deduction for startup expenses. This doesn't mean that you get to deduct $50,000 if you didn't actually spend $50,000. You're still only deducting what you actually incurred. We don't know any of the details of what that would look like, if there would be limits like there are here currently, but just know instead of $5,000, it's possible that you would be able to deduct more, assuming you paid more under that proposal. One thing that's, I think, the most important to remember is that a deduction is not a credit. So it's not a dollar for dollar thing. That $5,000 that you're deducting is not bringing your tax bill down $5,000. It's not putting $5,000 back into your pocket. It may be reducing your tax bill 10%. It may be reducing your tax bill 30%, maybe more, depending on what your profit was for the year, what your other income is, what all of that looks like, what your tax bracket is. But it's definitely not dollar for dollar. So don't be fooled by some of the headlines made it sound like you'd get a $50,000 dollar for dollar credit for starting a business. And unfortunately, that's not the case. What if the business fails? So a good number of businesses fail within the first 5 years, unfortunately. So those expenses that you haven't gotten to deduct yet, so the expenses that are being deducted over 180 months that you haven't gotten to deduct yet, those the remaining expenses would be deducted in the final year of that business tax return. So they're not lost. You do get the benefit from those dollars at some point. Any questions, anything in this area that you're confused about that I can maybe clarify? Feel free to leave comments down below. If you have suggestions for future videos, I would love to hear them. If this was helpful, please click like. If you'd like future content like this, feel free to subscribe, and I will see you next week.